Hello and welcome back to Green Pips FX. And on today's video, we're basically going to be doing a short one. I just want to explain how the concept of liquidity works, especially during session opens, and how to analyze and trade based on liquidity. Now, first and foremost, we need to have our structural bias, right? As usual, we need to know whether this market is bearish or bullish in the higher time frame. So based on the higher time frame, we're pretty much seeing a very bullish market, right? We see a progressive formation of higher highs and higher lows, right? And from that, we know that the next thing that's going to happen, price is basically going to make a higher low and then continue bullish to make a new high, unless we see some extraordinary shifts in market structure to tell us otherwise. Apart from that. And after we know the higher time frame bias, then we can now go into the intraday time frames and try to look for a very probable entry. So first and foremost, we need to know where are we existing in terms of structure, right? Especially when we come into the session, right? So example, right? I just wake up in the morning and I enter in the office to trade, and I just go in. It's the London session, right, in the morning. So my time is pretty much at I don't have the horizontal thingy here, but we could just use this, right? So my time of coming into the market is at 10 a.m. So where's 10 a.m? There's 10 a.m, right? Then we can just cut it right through like this. Sorry, let's just put it a little bit straight there, right? Boom. So that's 10 a.m right here. So this is me now coming into my computer and seeing my charts, right? So at this point of time, I'm in an intermediary bullish trend, right? But if I just roll back and see the previous trend based on the outside picture of price, right, I can pretty much see that price is in a was in a progressive bearish trend, right, from this formation of high, right, low, lower high, lower low, lower high, and then lower low, lower high, lower low, right? Now what happened is, so this is what happened, right? So price created this this low here, and then created this higher low, right, and then a lower low with this breakout structure right here, right? Let's just name this as a BOS. And from this breakout structure, what do we see next, right? We see that this structural low here was pretty much taken out. So this structural low, it was pretty much taken out by this candle here. And this candle here originates from this high here. So now we refine our trend into here, right? So this is the high that made this breakout structure. Now look at what price does. So price comes down, breaks this structural low here, and then it never gives you that double break, and instead it's just it breaks bearish, and then it instantly breaks bullish by taking out this high here. This shows us what? This shows us we're pretty much in a context of a very bullish market. Okay, so if we're having a breakout structure to the downside and a follow-up on a change of character, right? So I just want to keep this straight, so we could just name that change of character, right? So if we have a breakout structure and then an instant change of character, this here is a very powerful schematic showing you that this newly reinstated trend is pretty much likely to hold for a very, very long time. Now from that knowledge, let's now go back to our session, right? So this is what we understand. So we now understand that we're in a context of a bullish market. Now the next thing we have to do, right, because now we have our structural narrative, right? The story that this structure is printing is a bullish story. So now we need to find an S&D zone which will align with that story and give us a probable entry to go bullish from it and target the overall highs, of course, right? So when we look back, what are we seeing here? So this is the detail that we have, right? We pretty much have this here, right? We have a series of high, low, right? Intermediary high, intermediary low, intermediary high, low, high, low, right? So if we have this kind of price action, so let me just just want to remove these, right? We can just clear these and take this guy out also, right? So what are we looking at, right? We're looking at a potential buildup of liquidity in both sides of the market. And this, mind you, that this move here, it was at 4 to like from 3 to like 9:30 a.m., 3 a.m. to 9:30 a.m. when the session opens. So this here, it was pretty much the Asian range, right? And the Asian range, we know it exists as what, right? We have potential buy side liquidity here, as well as sell side liquidity here, right? You can see there's a perfect channel building, right? There's liquidity building here and here in terms of sell side liquidity and buy side liquidity. Now we know if this is an Asian range and we have liquidity existing in both sides of the market, then there's a very high probability that since this is a bearish market, right? Sorry, this is a bullish market, we know that there's a very high chance of the sell side liquidity being taken first, and then the buy side liquidity being taken next to just to funnel up those buys. Now, if we know that's what's most likely to happen, then we need to find, of course, an area of demand which exists below that sell side liquidity. Now, below this sell side liquidity, we have this interesting low in here that created this high here and also initiated the breakout structure. So this is pretty much a strong low, but its strength has been weakened by what? If we take a closer look into what exists in here, we'll see that just below this low here, there's what? There's an area of potential imbalance in here, right? So all this here is an area of imbalance, and if this is an area of imbalance that exists here and in here too, right? This imbalance here, right? So if there are imbalances below an S&D zone, since it's a bullish trend, in this instance it's going to be a demand zone, right? And there are imbalances below a demand zone, then that zone or that low is pretty much likely to act as a liquidity low, right? So this liquidity here is going to be taken all the way in accordance or in alliance to that low there. So this low here is also pretty much likely to be taken. Now, if we come to look at the most probable last sell to buy that exists below this low here, where would we look at, right? Of course, we'd look at this high here to this low here, right? This is the area that price sold very hard and then came to buy even harder to initiate the creation of these new highs here. Hence, I just refined this area now. So let's just remove those. So I just came to refine this area here into this wonderful. So I just took this sell from this sell candle here to the wick, to this wick here, just for protection. Of course, I would just take up to these bodies of candles. Now, this is all taught in the supply and demand videos. So if you don't know how to do this, then make sure you watch those videos first before you come to watch this video right now. So I just took it up to this area here for protection. So I had this this area of demand here, right? And I was pretty much just targeting the 50% of it, but I just took it as it is. So I just there we are, right? So this now here. So we were at this area here, right? So this is our 4 a.m. line right here, right? So I was at this instant here, and the thing that I was expecting is price to come down, taking out all this sell side liquidity existing here, and of course mitigating this imbalances here, and also mitigating this area of demand, right, by tapping into it and then rejecting, leaving me that confirm entry to go bullish with it. Or if I just wanted to, I could just place my buy limit order there and the stop loss there and target the overall highs, right? It's both things work, right? It just depends on your risk management. Now, since we just want to do a quick one, we're not going to confirm the entries or whatever, right? We're just gonna assumingly, right? We're just gonna do it assumingly. Let's just say we placed a bullish order here, and then the stop loss of this order was just below this low here, which is a 10 pip stop loss, right? And I was looking, of course, to target the overall okay, I didn't mark it. Okay, I think I just deleted it. But all right, so let's now focus on the entry, and then we'll focus on the targets afterwards. So there we were. So let's just put this back to auto, and from there we can just see now that our just after this 4 a.m. mark, price just attempted to create a high and then came down, took this sell side liquidity as anticipated, right? And then tapped into our entry, triggered it. So the entry from there was active. And of course, from this point, we were now looking to target. So let's just go to the 30-minute chart and see our take profit target, right? So our targets were pretty much lied. This overall high right here, this is our overall take profit target, right? So we could just call this the next liquidity run. But our intermediary targets, of course, we had a 40% partial in here, right, at this high here. So, you know, from that point, so this is my first TP. My second TP is at this high here, probably this S&D zone. And then from there, I would just look for price to, you know, come down a little bit and then come up and take out these overall highs there. Now, I hope this video is very, very informative to you. And, you know, if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications. And until the next one, guys, stay safe, have a nice trading week, and peace out.